look out for the same. Now, from the stock specific front, just like Nifty, most of the stocks, at least in the FNO basket, are not sustaining the move for more than 2 or 3 days. There are very few stocks which are actually moving up. So, at this point of time, nothing as such which looks very good. Yeah, probably Paytm can witness a good bounce because of its results, but also because of the short covering action that it saw in the last few days. So yeah, look out for the same. So that's it from my side. Like to other fundamental team to take over, please.
Thank you, Nirav. Good morning, everyone. On the result front, yesterday Colgate posted the result. It was below expectations. Revenue grew by around 4.2. Revenue degrew by around 4.2%, and operating margins were at 31.6% versus the expectation of 32.8%. We have seen consistent weak performance in the stock, and this is led by the increasing competitive intensity. We remain neutral on the stock, where the stock is currently trading at 43 times to FY27 earnings. Blue Jet Healthcare posted the result. Result was below expectations. Yesterday, we have seen a significant correction also in the stock. If you look at the revenue, it has seen the more than double, or we can say 117% growth. The gross margin for the quarter was at 48.5%, down by 6.5% from 55% in quarter four. That has had an impact on the EBITDA margin as well, where EBITDA margin reported at 34% versus 41% in the last quarter. So there was a sequential decline. However, YOY it has seen improvement. The decline in gross margin was attributed to the impact from the inventory adjustment and the overhead release. Also, there was a change in product mix with the higher API contribution. The management has witnessed scale up of operations in the pharma and API business with the long-term contracts. It expects to launch 2 products in the contrast media in second half and remain focused on its value-added variant strategy for its high-intensity sweetener segment. In terms of capex, it has increased its overall capex from 250 crore to 300 crore in order to build high level of versatility and automation at Unit 3 and to ensure the batch-to-batch consistency and the optimum yield. It has already spent 100 crores and remaining to be spent by FY27. The stock is currently trading at around 40 times to FY27 EPS, and we remain neutral on the stock. Thank you.
Yeah, good morning, everyone. Today, two IPOs are opening for subscription. The first one is the GNG Electronics Limited. Issue sizes of 460 crores, comprising of 1.69 crore of fresh issues and 0.26 crore of OFS. So, company basically is in the business of refurbishing of used laptops and desktops, and it operates across the value chain, right from sourcing and after sale and warranty support. So in simple words, company buys the used and worn out laptops, which when new could be a value of around 80,000 rupees, refurbishes them at their centers and sells them for around 24,000. So company gives warranty of 3 years for its products as well. So it has around 550 odd procurement partners from whom it buys laptops, and it is one of the largest player in this space with having a global presence as well. So there are a few smaller companies in this space in India. Most of the sales come from US for this company, where the market is quite matured. In India, it's a nascent stage. So the revenues and EBITDA of the company has grown at a CAGR of 46% and 59.5% respectively during the last 2 years. And at the upper high price band of rupees 237, the issue is priced at a P of 39 times FY25 earnings, which looks fairly priced considering its high growth expected, and it would be paying off a loan also from the IPO proceeds, and it has a ROE of 30%. So hence we are recommending subscribe to this issue. The bidding date is from today, that is 23rd to 25th of July, And the price band on the lower end is 225 rupees, and on the upper end it is 237 rupees. Secondly, there's one more IPO called IndiCube Spaces, which is also opening today. The company is a prominent player in the India's managed workspace sector. Like we have recently listed SmartWorks in the space, and also Office, which was listed last year. So they basically offer customized office environments with modern designs and essential amenities. This company manages a portfolio of 115 centers across 15 cities, having 105 operational centers, covering 8.4 million square feet of area and a total seating of around 2 lakhs capacities. Prominently, it is present in Bangalore. So the revenues of this company has grown at a CAGR of 35%, and EBITDA has grown at a CAGR of 61% in the last 2 years. And they have reported good cash surplus while making loss at the net level due to high depreciation. However, we believe concentration on a straight lease model can be a deterrent to growth, and we can wait and see how this space actually evolves. So at the upper price band of rupees 237, the issue is priced at 26 times EV by adjusted EBITDA, and we are recommending neutral to this issue. On the results front, Zensa reported numbers, and we attended the con call as well. The revenue grew 1.9% quarter on quarter on a constant currency basis, and the company showed growth, a broad-based growth across all the verticals. One of the vertical, that is TMT vertical, was subdued in the previous quarters, but in this quarter it showed 5.5% growth sequentially. And management expressed that the worst is behind, and this vertical should now show some kind of growth, though not consistently. The margins dropped 40 bips quarter on quarter due to investments the company has made. However, the company has given wage hikes starting from July 1st. It is one of the one of the few companies which have given wage hikes in this IT sector. Overall, the macro environment remains challenging, and the pipeline consists mostly AI kind of deals. And the stock is available at 21 times FY27 expected earnings. The outlook for Zensar is positive. And lastly, today Infosys will be reporting numbers. Revenues are expected to grow 1.5% sequentially on a constant currency basis. Margins can remain flattish or stable. And the street will be looking for FY26 guidance. And though the valuations for the company have bottomed out, so any kind of positive surprise can see a spike in the stock price. That's it from me. Thank you.
Good morning. Mahindra and Mahindra Financial Services posted its results. Results were below expectations. Its NII came at 12.8% year on year. Profits came at 530 crore versus expectation of 593 crores. The company has achieved a 15% year on year increase in AUM, mainly driven by strong growth in tractor sales, pre-owned vehicle financing, and digital personal loans. The management gave guidance in con call AUM to be in a high teen to low 20%, and they now work with 6,000 dealers. They target GNPA below 3% during FY26. Their tractor finance disbursement grew by 21%, and it is expected to be a key driver in FY26. Used vehicles grew by 3% year on year. Passenger vehicles growth was muted due to weak demand for entry level models and competition from banks. Commercial vehicle and decreased by 12% year on year. And management targets is to have 25% of AUM from non-will segments by FY30. Its credit cost was elevated slightly, and management aiming to keep it below 1.5% during FY26. And the company targets a 15% ROE and 2.2% ROA, supported by pricing strategies, cost control, and fee income. Its overall collection efficiency came at 91%, and they expect to improve it by next quarter. Management focuses on diversified growth, especially in rural P-owned vehicle tractors and personal loans, while managing their exposure to unsecured retail. The stock is trading at 1.8 times trailing price to book value ratio, and outlook is neutral for the stock. Jana Small Finance Bank results were okay. Advances grew by 16% year on year and 1.3% sequentially. Their secured loan book now makes up 71% of the total loans, and it is expected to increase to 72 to 73% in second half of the year. Their unsecured book declined by 2.5% quarter on quarter, mainly due to ongoing MFSI stress. The management aims for 20% deposit growth in FY26. Their net interest margin declined mainly because of reinvesting high yields investment at lower yields and decline in high margin unsecured segment. The management expects net interest margin to rebound to 7.2 to 7.3% by end of the FY26, and the unsecured segment to recover and funding costs to decrease. Its deposit growth targets is for 20%. The CASA ratio was flat in Q1, but it is expected to grow in double digits in H1 FY26. And management anticipates a significant reduction in credit cost by Q3. Their MFSI stress persists, but management extends a substantial reduction by Q3 FY26. They aim for 80% secured and 20% unsecured segment mix. The bank plans to open 70 branches this year, with 30 new branches and 40 reallocations to serve as a broader customer base. And they have launched three new products and to enhance the growth in customers. The improvements in asset quality are expected to be in Q2, with a significant decline in Q3. The stock is trading at a price to book value of 1.3 times, and outlook is positive for the stock. Thank you.
Good morning. Dalmia Bharat posted its results. The result is above expectations. Offtake came at 7 million tons versus the expectations of 7.2. It has declined 18% quarter on quarter and 6% year on year. EBITDA per ton came at 1261, which has grown 37% quarter on quarter and 40% year on year. The EBITDA margin came at 24.3% versus the expectations of 22.1%. The stock is currently trading at 15.7 times FY27 expected EV by EBITDA. We will provide further updates and outlook after the con call today. Thank you.
Yeah, yesterday Dixon reported numbers, and the numbers were above expectations. Revenue grew by 95% year on year and 25% quarter on quarter and came ahead of expectations. EBITDA margins were more of an expected line, but grew by almost around 95%, mirroring the growth of the revenue. Overall, the results were ahead, and the company has given a positive outlook for the coming period as well. Whereas Paytm also, the results were ahead of expectations, but mainly driven by cost control. Revenue growth was flat quarter on quarter, whereas contribution margin has increased from 56% to 60%, and EBITDA margin pre-ESOP has increased from 4.1% to 5.4%. ESOP cost came down substantially from 169 crore last quarter to 30 crores. And overall company has reported median profit in this quarter. Company has indicated that the profit reported can continue in the coming period as well. So overall outlook is positive from the long-term perspective. Near-term marginal uptick can happen. That's all from us. Now I'll request commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So, all in all, commodity looks positive. Gold one can initiate buy on dip, though prices have Yes, rallied yesterday. One should wait for a dip around 1 lakh, 1 lakh 100, 1 lakh 1000, and sorry, 1 lakh, and maintain a stop loss of 97, 98. Sorry, 99 700. On upside, we are eyeing for 1 lakh 500 to 800 levels. Similarly, silver already opened gap up, but one should wait around 1 lakh uh, 15,000 700 to 1 lakh 15,500 and initiate a buy with a stop loss of 1 lakh 14,800. On upside, 1 lakh 17,000 18,000 other levels where one can take profits. In metals, copper looks positive. Prices are expected to test 905 908 levels, buying around 898, 897 with a stop loss of 892 is recommended. Zinc too, one can buy around 268.50 with a stop loss of 267. On upside, 272, 273 are the targets where one can take profits. Crude oil prices are expected to consolidate from 55.70 to 57.50. A pullback is expected, so one can initiate by strictly with a stop loss of 55.50. And natural gas too prices are expected to consolidate from 270 to 290. Though a pullback is expected, and one should enter around 278 and strictly maintain a stop loss of 270. That's it from us. Thank you very much.